Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, September the 5th. The year's 2019. Let's talk trading. Mirror, mirror. Remember that mirror, mirror on the wall? Who's the greatest trader of all? Well, something like that. Anyway, kidding aside, when you look at things around you, and in trading, if you look at your chart, it's a reflection of you. It's a mirror. You might think that's kind of crazy, but one of the things I like to do is if I go into a convenience store like a 7-Eleven or a Quick Mart or Circle K, and there's maybe 2 or 3 cars parked outside, when I walk in, I like to see if I can match the person to their vehicle, because a lot of times people look like their vehicles. If you see something old and beat up, some old truck or something with every fender's a different color, and then you see some guy inside that's kind of scraggly, and he gets out and gets in the truck. He goes, "Yep, that's congruent." Or you see a Beamer or a Mercedes Benz, and it's just nice, immaculate, and you see some lady in the store who's dressed to the nines, hair and makeup just perfect. You go, yep, that's probably hers, and sure enough, it is. It's so funny how many times um, when you do that, you can see how what people are with, what they surround themselves with, their environment is a reflection of them. So, when you look at your chart, take a look at the chart and just see how much that chart reflects you. If you just have an empty chart, what does that tell you? Well, I would say it means like you're confident in what you're doing because you don't need any outside help. You're not looking to an indicator to make a decision. You are going to look at that chart, you're going to study that chart, you're going to analyze that chart, and you're going to make a decision to enter, wait, or exit. That simple. But if you look at a chart that looks like a chart on drugs, has every indicator under the sun, and in fact, there's so many indicators you can't even see the price, well, you know that person probably lacks confidence, probably lacks or is full of doubt, and it paralyzes them, and they're just looking for something. And it also says that they're searching to find something outside of them to help them. Or you might see a chart that maybe has just one squiggly line on it. And you can see that person's narrowed it down to one thing, or just a couple horizontal lines possibly. You can see that they've really narrowed down what they're looking for, and they're going to use that line, whether it's squiggly or horizontal or angled line for that matter, to be their guide that says yes, no, enter, exit, wait. So take a good look at your chart and see what it's telling you about you, because it really does reflect you. And one of the things it might reflect is whether or not you're using risk or money management. You might have a line on there that tells you, where to get out. And as we all know, the risk management is very, very, very simple. Only lose so much per trade and keep that amount small, and make sure you keep that loss pretty much the same. You don't want to have one big loss take you out. You guys hear me say this just about every day, but it's that important. Okay, we'll start with the weekly chart. And what do we see? We see that the dollar yen has broken through the high of the previous week's candle. Right now it's 48 pips above it. And so, for example, what does this chart tell you? Well, it shows you we're looking at just a few points of interest here on that previous candle. Basically, we have what? 1, 2, 3, 4, 5 lines from the previous candle and just the weekly open right here. And you can see, looking at the wick zone part of the dashboard here, we're above the high, but we're still inside bar 2 bars ago on the monthly. Once again, what does, a reflection here of this particular chart? We're still down for the year, down 250 pips, but we're moving up on the week and the month. And right now, the week and the month, since we just started this week, are the same. On the daily, remember, here we just have 3 horizontal lines. We're looking at the first day of the week right here, and we were looking to trade the breakout. You see here we broke out to the bottom side yesterday, or 2 days ago. Yesterday started outside the bottom, went down, then we actually went outside the top, came back in, then we had a nice break today, 77 pips to the north. Simple trades. We show you these a few times a week, but that was a very nice break there. And we're above the open of the first trading day of the month. That's why the candle is green. And as far as the range, you see we just broke out of that range. We're almost ready to enter in to last month's first day range. Now, there's something else I want to point out here on the daily chart. Remember, in some videos, I don't know how long ago, but I like to talk about the turn trade, that every top has a green followed by a red, and every bottom has a red followed by a green eventually, okay? And so you can see here we put in that bottom, put in a bottom here, then put in a lower bottom here, red followed by green, and then finally, right here, you can see what happened when that top was broken, which is really simple. It was right, it was very close to yesterday's high. Inside bar of 4 days ago, weekly inside bar of 2 weeks ago, but those inside bars once again proven to be a profitable trade, just using those horizontal lines and taking those trades. And the range, let's see, 3, 6, 9 pairs over 100, and the dollar yen clocking in at 90. And as we can see, once again, that breakout of the previous day. Highest open, lowest open. Okay, this is the daily highest open here. Right here is the monthly H1 highest open. You see prices moving. So holo traders, remember, one of the things you don't is advised against is if the price breaks out of the previous day's high right there, you want to be careful doing reversals. You want to let price range because price has to range. The pivot point was below. We didn't get the trigger. We got the trigger long. So if you were waiting for that pivot, obviously it's going to be a missed pivot unless we have a huge move down. Red rats, prepare. Already 9 pips off of the high. Once again, we missed that pivot. Hit the monthly pivot. And the weekly pivot's here. And that's already been hit. So we have a missed pivot here. And we have a missed pivot here. So it's possible price might take this one out or this one out. Just have to wait and see. Price action traders. One ball at the bottom. Go green at the line. So 3 balls at the top. Look to go red at the next candle, heading to the south side. Wick zone, in and out, back in and back out. Once again, just the same simple horizontal lines. You'll see these on most of my charts. Previous day, previous week, and previous month's lines. The open, the high, the low. As far as what's happening on the tick level at the moment here, you can see not much action, just a few pips. Einstein line, you can see had a huge move here. And we took a breakout to the upside and just rode that. You may have triggered out here, or you may have triggered out here, or here. When I say triggering out, you see green followed by red. Look for the reversal. It broke through the bottom there. Here we had green followed by red. That red was an inside bar, and it didn't break to the downside, so you may have stayed in this trade to pick up some more pips. So one of the things to do is the things that get you into the trade on the one side, you can use that same thing to get you out of the trade on the other side. So for example, if you were in the trade here and it rode up, so you have green followed by red, you see the red bar, price broke below the low that's previous, that would have been a point to exit. You would have gotten a McGillis share of the trade. You know, no reason to kick yourself for getting out too early, thinking, oh, I could have had this many more. Okay, you can see price is now in the upper ATR zone. This is when I start looking for a reversal. It's the daily open plus the max ATR over the past 14 days, I believe, which was 10. So as you can see here, it poked out above that ATR and then started to pull back. Now we've got 9 pips to the downside. You see it also hit the weekly open plus the ATR, half that ATR. So once again, these are indications price may reverse. So you start looking for the opportunities. Wouldn't trade against this, in this case, the H4 candle color. Wouldn't trade against H4 and H1 right now. Price looks like it wants to continue. So you don't want to trade against it. So that's it, fellow traders. The chart's a reflection of you because it's not what you trade, it's how you trade it. So go out there and drain the banks.